Welcome back. Well, the markets are as flat as can be as we speak. The Nifty, it moved into the red. Now, in fact, it's moved back into the green. It's up close to around 35 points odd. But the Nifty Bank, that's unmoved, and that could be the joker in the back. But let's focus on a couple of other names. Affle India, that's the next corporate we're tracking. After the board approved raising some funds. Well, to understand more about that, Mr. Anuj Khanna Sohum, the founder and chairman of the company, joins us. Hi, Anuj. Well, run us through these plans, in terms of what are you all doing. And I believe you're looking at some inorganic growth as well. So run us through those plans.
Sure. Well, thank you for having me on your show, and congratulations, first of all, to all the Argentinian fans. I think the momentum towards 2023 should be quite positive. Now, Affle is a very strong believer in the long-term thesis of our strategy. And when the markets are showing signs of certain areas of weakness in the macroeconomic sense, we are actually finding some very attractive value-based transactions that can actually help us to accelerate our inorganic growth strategies going into 2023 as well as long term. So what we are looking for is those targets and those companies that are already profitable, versus in the past we have done acquisitions of companies that were losing money or breaking even, and then we would turn it around through using our tech and strategies. Now we are looking for companies that are already profitable, but still are being valued on the same basis as companies that in the past were just barely breaking even. So we are getting good value-based transactions where we can look for not only strategic growth, but also margin expansion on a sustainable basis and drive deeper verticalization with our customers as well as in the industry. So we are taking this kind of an approval from our board where we can use not only the cash that we have, but also selectively, very carefully use our equity through a swap mechanism, which is allowed by SEBI on a 90 days weighted average of our share price for certain transactions or certain part of those transactions. And since those negotiations are already quite actively on, looking into early 2023, we wanted our board to give us the support to exercise using equity swap as a mechanism if it is appropriate for any transaction for inorganic growth.
So what you are saying is that your board has given an approval of a share swap of about 35 lakh shares, right? At a price which is based on a formula of the last 90 days.
So
go ahead.
So the regulation, I mean, we have never used this before, and we are all kind of going through the regulatory requirements. So SEBI has a floor price requirement for any share swap transaction, which is based on the 90 days weighted average. And today, the 90 days weighted average is actually 10% higher than, or approximately 10+% higher than the current trading price of the company. So, and this will keep moving on depending upon when we close the deal, when we go to the shareholders for approval. But we will use it very carefully. This currency of using equity for share swap. We will use it very carefully and conservatively to drive value for our shareholders. 2, we will only use it selectively to align those entrepreneurs who are coming on board for long-term retention with longer-term lock-in periods, not just the typical 6 months lock-in that one would give in the equity swap, but we are looking at more like using it as a tool to align the entrepreneurs for even 2 years or possibly longer.
Yeah. But Anuj, you must have a size of acquisition in mind, right? Because you've given a cap on the number of shares you're willing to swap at 35 lakh, which gives us an approximate range of how much money the company can raise, which could be 350 crores, it could be 400 crores, depending on when you go ahead and take that approval, right? So broadly, that's the amount of funds you would need to raise. So I'm saying that if you look backwards, that you probably have an acquisition target in mind because you know how much you need to raise.
So first of all, it is not a fundraise. There will be no funds being raised. It is a share swap. So let's say we're looking at a company where the founder of the company still owns, say, 50% of the share of their company. Instead of giving the cash into the hands of the founder, we could give some cash and some equity swap and make sure that the founder is retained and logged in with us for at least several years to come. And therefore, there is no fundraise in the process. It's the approval roughly is about $50 million US worth of equity, which I think in INR terms translates to around 400+ crores. But we're not looking at a fundraise. We're using it as a tool as a currency to pay and swap the shares of the founder of that company who was previously owning his company shares. Now we are saying, sell your company to us, join our company, and give the alignment, the strategic alignment to that entrepreneur to stay invested for the next many years to come using some of our equity instead of holding their own share, and then consolidate that company into us for inorganic purposes.
Anuj, but using shares as currency, but a currency which is depreciated 50% from its highs, right?
So first of all, the 90-day average is actually 10% higher or 15% higher than where it is today.
Okay.
So that's one. Secondly, we're not using it right away. We've just got the approval. And depending upon where the stock market is and the prices, we will use that currency very selectively and only use it for the purpose of incentivizing the entrepreneur who's going to be full-time working with us for next many years. So it actually works out as a good negotiation tool in the process to align the entrepreneurs for the long term. Like even in the past, like when we acquired all our acquisitions, we have done 100% cash acquisitions, and then we do use our stock option plan to build retention plans for the entrepreneur. So effect is the same. Now this time around, if you're saying that if we find the right opportunity, and if we can align it with some portion of the transaction and equity swap, it actually makes perfect sense.
How many companies are you doing due diligence right now?
Well, let's put it this way, that every transaction that Affle has already done in the past, our courtship period with those companies was at least 3 years. So given that context, we are already talking to a very strong pipeline of these companies. Now, the ones that we're talking to this time around are from day one going to expand our margins as well, right? This is a big difference. Every company we acquired in the past were actually just breaking even. This time around, the companies that we're looking for 2023, they will already help because they're already profitable and they will bring margin expansion. Having said that, we would still value them on the same kind of multiples that we valued the previous transactions. Because the markets are a bit down, we think that we are getting the right kind of valuation to not only find strategic growth, but sustainable market expansion and verticalization to grow inorganically.
Anu, just to put it very simply, as of last quarter, you're doing around 19.5 to 20% of margins. So the acquired company, if at all, whenever you close it out, those margins will be better than what you're doing currently. Is that correct?
Well, two things there. First, we will acquire only those companies that are already meaningfully profitable, which means the EBITDA has to be in the 15 to 20% range. That's one. Secondly, we obviously with our tech and strategies and efficiencies in the business model would further expand that. So the idea of doing this transaction is not only to find strategic growth, but do sustainable margin expansion within the first year of the company's acquisition itself. So once they're combined with us, and as we execute with them, we would expect margin expansion in year one versus, in the case of Jamp or the other transactions where we were waiting till year 3. That is the difference in 2023's M&A strategy for us.
And the target is that the company should have margins of 15 to 20%, and from there on, you all will take it, right?
Absolutely. Absolutely.
All right. We'll leave it there. Thank you very much for your time. Good luck. And we hope to speak with you once you are closer or once you close one of these transactions. Thanks indeed for joining us with all of that detail.